With cryptos climbing and Bitcoin sitting right back around $17,000, many people are speculating that the crypto market could be in position to see some type of bear market rally, especially as we do approach next week's Fed meeting. Now in today's video, I want to give you my opinion on that, if things seem as if we're in a good position to see some growth here and exactly how I'm preparing for it. So let's not waste any more time at all and let's get straight into today's video. Now, looking at Bitcoin, do understand that Bitcoin is not moving specifically off of technical analysis. Rather, technical analysis is solely just a visual representation of investor psychology, which is extremely important in this market, especially right now. But what we can see is that we are in a more macro sense in an area in which it wouldn't surprise me to see some type of bear market rally. What we can see is that we are currently getting a strong, extremely strong drive of bullish divergence as we have put in a low into this lower low, while simultaneously putting in a higher low here, especially coming out of this 30 level. What you can see is that bullish divergence of this nature is not common, but a few of the last times that we did see this happen were back in 2015, in which we did put in something extremely similar, right? In which we came down here, we saw a bounce, we put in a low, we saw a bit of recovery into a capitulation low there. We set the higher low in this example, so a little bit different, but this low to lower low while setting the high to higher low was a great representation of some bullish divergence. And almost immediately after that happened, we did enter back into another bull market. Now, this is not about to happen, I don't believe, but it is a good sign. We can also see back here in 2013, something extremely similar happened in which we went down, we put in a low into a lower low while putting in a higher low on the price. Now in this example, of course, that is going to be hidden bullish divergence, which is a little bit different, but in the same breath, it is extremely important to see that these bullish divergences have led us to see growth in the past, and I wouldn't count it out now because again, those are the only two recent times that we saw something extreme of this nature. So for that reason, that is something to pay very close attention to. What you can also see is that we have seen massive extensions down into the bottom side of the Bollinger Band envelope, and typically speaking for Bitcoin, we do not sit here very long. We'll touch it a couple times for sure, but eventually once we do continuously get these extensions, we will see a bit of a path reversal to come test the top side here. You can see back here, right? We came back down, lost the 20 SMA, straight to the bottom of the Bollinger Band envelope, recovered it, back tested that 20 SMA immediately into the top side here. You look back in history and you can also see that this is a very similar pattern. Although we did touch it once, we got rejected, we touched it twice, we did eventually start to work our way back up to the top side here. And even as we did capitulate, boom, outside to the bottom side again, we eventually did recover back up to the top side of the Bollinger Band envelope. This is simply something that just happens over and over and over again. You can see back here, the bottom was getting extremely close when we then touched it for the first time. Once we touched it the second time, the bottom was in, boom, back to the top side of the Bollinger Band envelope. So again, what you can see is that this is a very recurring thing, and we are in a situation in which we've not got that top side test recently. Macro environment is a lot different than it used to be, but it doesn't eliminate the core principles that the likelihood of us coming revisit this relatively sooner rather than later seems very likely. Now looking at this thing from the daily charts, the daily perspective, we can also see that we are in a very, very similar situation in which we are finally coming retest this top side trend line that we've been stuck within ever since roughly about June and May. Okay, what you can see here is that when we got this Luna crash, we did see this massive capitulation off this high, and as we did recover, we came back up right here to establish a trend line. Now following the trend line down, we can see that in September we did come back up and establish resistance here again, establishing that this is a massive point of resistance and bearish liquidity, and beating this and getting over this will be extremely important. Now, when we did get decent inflation news, that was enough to push the price over this trend line, but of course, with the FTX crash, that party did get ruined, and we immediately got shoved back below this trend line, in which we are now coming back up to retest it. So the question then becomes right now, are we capable of breaking back above this $17.5 thousand level? If we break $17.5 thousand, we are in a situation in which we've not only broken trend, but we've started to re-enter back into this massive zone of liquidity in which we were hovering above for quite a while, and it will be extremely important to see that these previous points of massive support don't start flipping into resistance and pushing the price back down to the downside to set these new lows. So what I'm watching out for right now is, are we capable of breaking back above $17.5 thousand? If we're capable of breaking above $17.5 thousand, I think we're in a position to see a little bit of growth. Obviously, there are going to be some battles that'll take place, right? We have to see this thing break above 18.7. We have to break above 18.1. We have to break above 19,000. All of these previous points of support are going to try to act as resistance. But first things first is we need to get above the first one. And if we're capable of doing that, we could be in a position, even if it takes a bit of a back test, to finally start to see a bit of growth in this bear market, especially if we do get good inflation news and Fed meeting news next week. So what I would say is to pay very close attention to December 13th and December 14th. That is when the next Fed meeting is going to be. And I think that is going to have a major impact on how this move does happen and how we can go about it. Personally speaking, I have been doing a little bit of accumulating in this area. Even if we do start to capitulate a little lower, I am in an accumulationary phase right now because I do believe it is more likely that we are going to see a bear market rally sooner than later. And of course, I do want to be a part of that, especially if I can take some profits back up towards maybe $24,000 to $25,000. Now, I did have some news today that BitGet did just release its Merkle Tree proof of reserve system to enhance transparency. Of course, as we did mention, the FTX situation was kind of a party pooper for all of crypto, and all exchanges were put under the limelight. And BitGet did just come out with a way in which people can see that their assets are stored and in their reserves, held on a 1-to-1 ratio. So do go check out this beincrypto.com article. It breaks down exactly how this works. But if you do want an exchange that has its proof of reserves out, and you can also trade with absolutely zero fees on spot trading, use the link down below in the description, and the first 100 people to deposit $500 will get $50 back as a futures trading bonus, so make sure you don't miss out on that. But with that said, that is going to be about it for today's video. Of course, I hope you guys did enjoy. If you did, you can always let me know simply by smashing that like button and subscribing to the channel if you are new, and I will see you all next time. Peace.